Welcome to our weekly summary of the most important news about artificial intelligence in the financial sector of the United States. This week, things have changed fast. Stay until the end to see how these developments affect the financial market, and especially your everyday finances. Together, let's uncover opportunities, face challenges, discuss controversies, and reveal groundbreaking innovations shaping the future of artificial intelligence. Recently, the U.S. government unveiled a comprehensive national strategy to boost AI development, built upon three pillars: technological innovation, digital infrastructure expansion, and global leadership. Key initiatives include the construction and expansion of data centers and semiconductor factories' essential infrastructures to sustain large-scale AI systems. Alarmingly, according to Deutsche Bank, data center energy use grew from 2% in 2018 to 4.4% in 2023, and could reach 12% by 2028, around 580 terawatt-hours. To support this growth, proposals aim to ease environmental regulations, expedite infrastructure approvals, and prioritize fossil fuel energy, igniting heated debates about environmental impacts. Experts stress the importance of balancing this crucial digital financial growth with sustainability practices. We now face a classic clash: technological evolution versus environmental protection. Which do you consider more critical at this moment? Artificial intelligence supremacy has become a strategic priority for the U.S., directly rivaling China, its primary technology competitor. Deutsche Bank reports that the United States hosts 42 of the world's 50 largest AI companies, 33 in Silicon Valley alone, and attracted nearly 75% of global AI venture capital in 2024. The American strategy involves extensive exports of comprehensive AI hardware and software packages to allied nations, aiming to solidify alliances and limit China's market reach. This competition transcends technology, encompassing global supply chains, regulation frameworks, and billions of dollars in commercial disputes. Losing this AI leadership battle could mean sacrificing enormous economic opportunities and influence, ultimately affecting your personal finances. The private American sector is also investing massively in artificial intelligence. For example, Alphabet, Google's parent company, announced an $85 billion investment in AI just this year, surpassing expectations and reflecting high confidence in technology monetization. Amazon, Microsoft, and Meta are projected to invest nearly $320 billion in 2025, emphasizing data center expansions, chip acquisitions, and AI product enhancements. These investments respond to growing demand for tools automating financial processes, improving customer service, and enabling real-time data analysis. Investors' concerns about immediate returns are outweighed by bets on AI becoming essential through widespread adoption and reduced costs. Tech giants invest billions, aiming to revolutionize everything from your credit access to managing your investments. AI is already transforming finance in practical ways. Banks employ sophisticated algorithms to automate routine tasks, enabling strategic employee decisions, increasing productivity, and cutting bureaucracy. In fraud detection, AI analyzes millions of transactions instantly, identifying unusual activities and safeguarding billions of dollars. AI is essential in credit risk analysis and diversified portfolio scenario modeling, boosting banks' operational safety and resilience. Algorithmic trading utilizes AI to perform trades in milliseconds, optimizing investments for superior risk-reward outcomes. Robo-advisors democratize personalized investment guidance, making premium financial advice accessible to broader populations. Generative AI produces automated financial reports, market predictions, tailored investor summaries, and sentiment analyzers for news and social media to forecast market movements. These advancements significantly enhance efficiency, making financial services more accessible and tailored, transforming experiences for both consumers and investors. Yet, progress brings considerable challenges. The growing adoption of AI in finance raises regulatory, privacy, and ethical questions. A key concern is AI explainability. Clarifying algorithmic decision-making is crucial for transparency, fairness, and error prevention. Increasing energy use and regulatory debates demand sustainable, responsible actions from both governments and companies. Experts emphasize the upcoming years as vital to establish regulations balancing innovation, security, and individual rights. Furthermore, AI reshapes the financial labor market, automating routine roles with increasing demand for skilled AI professionals. Addressing these issues will shape the future of technology, finance, and employment. This week showed artificial intelligence is not future technology, it's already redefining the American financial landscape, impacting investors, consumers, and the economy. How do you think the race for AI dominance will influence your financial life? Leave your comment below. We'd love your input. If you enjoyed this video, please like, subscribe, and activate notifications for more cutting-edge content on technology, finance, and innovation. There's much more ahead. Stay tuned and don't miss out. Recently, the U.S. GDP exceeded expectations, driven largely by AI-related investments in data centers and cloud infrastructure. Major indices like the S&P 500 and NASDAQ reached all-time highs, powered by confidence in the economic impact of artificial intelligence. Startups have raised over $100 billion in AI venture capital in just the first half of 2025, marking a record-breaking surge. According to PitchBook, over 60% of US VC funding now targets AI, signaling long-term investor confidence. The latest AI action plan proposes loosening environmental restrictions to accelerate data center approvals and expanding export strategies to allied countries. Some experts praise the plan's focus on digital supremacy, while critics warn of regulatory gaps and unchecked risks. OpenAI CEO Sam Altman issued a stark warning on voice fraud in banking, calling it insane that voice authentication is still in use. He cautioned regulators that AI misuse could trigger financial crises or enable next-gen bioterrorism. Meanwhile, financial giants are doubling down on AI. Alphabet pledged $85 billion to AI development this year alone, and Amazon, Microsoft, and Meta will likely invest a combined $320 billion by 2025. These investments aim to boost automation, analytics, and customer experience in financial services. Anthropic introduced Claude for financial markets, integrating data from PitchBook and Morningstar to help analysts streamline decision-making. Analysts expect tools like these to replace repetitive tasks and offer deeper insight with fewer resources. Congressman Greg Casar proposed the Stop AI Price Gouging Act to regulate AI-driven price discrimination, reflecting rising concern over algorithmic bias and consumer fairness. Despite the boom, experts stress the need for balance, urging sustainable growth, transparent AI use, and protection of labor markets and individual rights. The next few years will be critical in shaping AI's role in both finance and society.